Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on July 7th, 2020 with the Forex market analysis and live trading breakdown for you. And before we get into it, we want to pull up our disclaimer to remind you that this is for educational and illustrative purposes. There is no, everything here is in a little bit of a lag, just to let you know. So if you want to follow our trading signals, subscribe to our signal system, which you can find that on our website, forex-trading-unlocked.com. So with that, let's go to our live action screen. So we have the forex-trading-unlocked.com website pulled up. We have our workstation page already pulled up. We're going to go past the numbers. And here we have the dollar index. The dollar index has been under a little pressure as of the beginning of the Sunday trade for this week, after we're coming off of the U.S. holiday. And today we will see how the market is continuing to follow through. So dollar bears right now are having a nice start to the week, but not quite too extreme. So let's look at the euro US dollar, which is the biggest component of the dollar index. So today, as you can see, it is reversing most of the gains that we had yesterday, or had at least tried to. We are now in the middle of the range today, so we're pretty much right around the middle of the range also from yesterday's trading. So does that mean we're averaging out? Well, I don't know. I think right now, as you can see, the euro US dollar is wedging on a longer term basis, and all at 114.27, this swing high here, and 111.67 right here, to swing low here. So right now, I think we can, as you can see, it's been pretty much in a range trade here for a month, and it looks like it's going to be probably more of the same, unless we have a breakout to the upside, like I said, here at 114.27, or a failure here at 111.67. I think that we really are going to be set for sideways. So I don't think the dollar index is going to really remain under pressure when it comes to this biggest component, unless we can get a rally and make higher move highs. Now, technically, over the past couple months, this market is in a bullish mode for sure. Long term, it's wedging, as you can see. We can go back, and we go back before all the shakeup and stuff like that. And if you look at here, oh wow, look at our range here. Look at where we've been. So let's just put a cap right here, and we'll put a little bottom right here. So if you look at last fall, actually going all the way back to beginning of last fall and even last summer, we've been trading in this range of 112.37 down to $1.984. Now let's speed forward to, we had the big shakeup when the pandemic started, the big collapse, and then we started to average out. Then we had a nice little rally, we got above it, and so as you can see that we are just pretty much consolidating just above this pivot of $1.1237, where the market has been basically in this range for a year, of this $3 range. Obviously spiking above and below it by a few handles, but not really holding those levels for very long. The bulk of the trading obviously has been through here. Now, as you can see, we found some support here, and have been bobbling up until basically yesterday, and today we have been trading right along this line at 112.37. So right now we've been making a series of higher move highs and higher move lows on a longer term basis, which it supports a bullish trend. However, over the past couple weeks, what has happened is we've settled into a range trade where we have made lower move lows and lower move highs, higher move lows, which have been just tightening up this range. Even the high yesterday didn't take out this high here. So let's put another horizontal ray here, right there. So at 113.5, which this seems to be containing even the bullish sentiment that seems to have been trying to push the dollar around. So right now we're very neutral to euro US dollar. Now the British pound US dollar, which is the second biggest component of the dollar index, this one is making a move today. So maybe this is where we're going to start to see the beginning of either true dollar bearishness, or maybe we just have a divergence where certain currencies are getting bullish versus the dollar and others are not, which I believe is the case, and that means the dollar index is probably bottoming out and not going to be a good gauge, if you will. So let's look at see what's going on here. The British pound US dollar, as you can see, is wedging and has been staying and contained within this kind of area for the past couple months. But now, as you can see, we're getting close to this downward sloping resistance. We came off this upward sloping support line. So we're going to use $1.2242, this last higher move swing low, and this last higher move swing high at $1.2828 as our breakout points. Excuse me. So if we can breach this downward sloping resistance, that would mean that our sideways trend most likely is coming to a close. So, if we reverse gears and we take out this $1.2242, well, then that would mean we will have made a higher move high and then a lower move low, because this swing low here, it was a higher move low. So we came off this low here, made a higher move high, or excuse me, a lower move high, made a higher move low, higher move high, higher move low. So when you have the consistency of higher move highs and higher move lows, obviously that is your bullish trend. And we have came off this. That's why we have this low here as our upward sloping support line. So a failure here would have us pressuring this $1.2242, and a failure at that level would be indicative of what? Lower move lows after lower move highs, and that would be a bearish trend. Okay, so right now we are bullish. Now here's something that you want to take into account. We did have a bullish engulfing line buy signal here that had occurred a little over a week ago. So now if you look at what's going on with this move, is it just going to set the tone for a continuation of the higher move highs and the bullish trend? Very likely to, but it may not. So let's see if we can find out where we would be contained. So if this bullish signal is going to run out of gas, let's just use Fibonacci as our guide here and see what we can come up with. So the 50% would be right here, which we're just below, and then we would have the 0.618. Oh wait, excuse me, there's the 50%. Okay, so we are right in the target band on a Fibonacci basis. If this buy signal is going to run out of gas as just a corrective move, we are pretty much in the area where it's going to most likely run out of gas here. If we can get above $1.2597 here and get a little bit higher, well then it looks like we're going to be set up for a challenge of this downward sloping resistance line. Now, is that where we'll run out of gas? Well, who knows? I mean, right now for this buy signal, as far as what is the validity for the velocity of a corrective move off of this current slide lower, I mean, you got to remember, what was it on June? Was it June 10th? Here's when we topped out, made a higher move high, and then we had been trading lower down to towards this higher move low for a couple of weeks. So we had been in a bearish trend. Now we're in a corrective move, or is this is actually more of a trend move because the trend has been higher. So the correction is over, and now this is a buy signal with which is going back to the trend. So if that's the case, then we are looking at a breakout to most likely manifest over the next few sessions, maybe the next week or so. And as we get pressure through resistance, then our big target would be this $1.2828. If we can rally above $1.2828, then I see us having a very, very good chance at maintaining a bullish posture. And then obviously this would mean dollar weakness also, because it's the second biggest component of the dollar index. So even if the euro stays neutral, if this one starts to turn, then that most likely will have the dollar index most likely hitting support and pressuring newer move lows. And who knows, we'll take a look at these other currencies and see if we have more dollar weakness creeping in. So remember, with the euro US dollar, we're kind of neutral. It's really hard to gauge whether or not there's really any dollar weakness or dollar strength. But right now with the pound US dollar, we do have a valid buy signal. It has hit our target zone for if this was just a corrective move, our target zone has already been hit with $1.2597 being the cap. If this is a continuation of a bullish trend for this buy signal, well then that's a totally different story. Then we need to use, let's see, we need to use a fib. Let's see if we can use this right here. So we would use this to here. Oops, no, right, that's the wrong way. here to here. Right, yeah. Okay, so for this, all right, so our upside target now would be, I'm going to put a horizontal line here. Our first initial target would be, most likely, this would be a good breakout target. And then here, oops, and then here, and then right there. Okay, so what do we have going on here? Let me get this off of there. Okay, so if we have an upside breakout here, this is what we're looking at. If this buy signal is a trend move signal, meaning that it's not a corrective move, then we should continue higher, take out these levels here, and then most likely come into this target zone up in here. Now, this is something that's not going to happen overnight. This is something that's going to most likely occur over the next, like, few weeks or so. I mean, volatility in this market can always come in very big. You can see what's happened over back here in March. We all know how the pound is definitely, or when it moves, it moves. So for our big upside target band, it would be for $1.30.53 all the way up to $1.31.83 in this area here. But like I said, this is something you're looking to manifest over the course of probably, I would say, the next few weeks to a month and a half. I don't see it happening in any type of short amount of time. So that would mean us kind of like coming through here and trading like this, you know, and, you know, kind of going like this as far as timing. So if this, let's say that timing is something on the core as far as maintaining this trend. Because I'm looking at the average of how this has been going up for momentum. If it just stays at the rate that we're traveling at right now, that would have, where's our vertical? Here we go. Here's our vertical line. So let's see where we get to that area there. So we're looking at August 14th. So yeah, we're looking at a good 5 weeks out as far as when we possibly could get into this target zone. And I'll move it all the way over to here. Okay, so to hit into this upper range, should the trend continue, and the trend is your friend, and right now we do have a very strong high probable Japanese candlestick pattern, which, by the way, if you want to learn how to trade these patterns, high probable Japanese candlestick patterns, there is a book that's available on Amazon.com in paperback and Kindle version. So check it out, and also make sure you subscribe to this YouTube channel as well. So right now, that's what we're looking at. For the next 5 weeks, if this trend continues, for us to basically kind of snake along and creep our way up that way. Now let's look what's going on in the US dollar Swiss. The US dollar Swiss here is going sideways. This is another reason why I think the euro, it's tough to gauge. Even if there's a little bit of dollar weakness like that is here, and it continues for the dollar to fall through support, I don't see it being erratic like any big moves. I think it's grinding its way lower and then bouncing back, and the bouncing back seems to be much stronger than it is grinding lower. So I'd be careful selling into new lows. I would look, if anything, for rallies to sell and wait for a signal, because we don't have any signal going on here whatsoever. We got nothing. This is all sideways. There's nothing to go on here except for this downward sloping resistance holding the trend intact, and only basically a breakout of a 95.59 level here would then have us pushing up against that, and then we would have to get above that, and even still that just has us in a big neutral territory all the way up to 98 cents basically. So this one, there's really nothing to read there, and if the US dollar Swiss does get to rally like that, well then that would definitely help the dollar index a little bit and keep it more neutral. Only if we fall to this 93.77 area, then I think we would still continue to grind lower, but I don't really see any major extremes as far as if you look at where the Swiss has been. I mean, we've been trending lower, obviously, for the past, like, half a year, and especially after we had set this high back in March before this market started to consolidate. But it's basically in a consolidation to consolidation lower mode, nothing really extreme. Now, we do have some things Shaping up over here, we have the US dollar Japanese yen, where we have what going on? This market has been in such a tight trade on most days. It's been trying to make a move over the past month. And here we're back to sideways once again. So we're looking for a breakout of the last swing low and the last swing high as far as our gauge for momentum and direction. The market is wedging in a longer term with downward sloping resistance and upward sloping support, but this could still come through these lines, and just as long as it's between these barriers of 109.93 to 105.94, I think you're looking at a big sideways. So the yen, we don't have a signal right now. Well, we did have one here. We had a bullish engulfing line, and this fell just shy of our upside target. So maybe there's a little bit of a buffer zone here to get a little higher, but we already had gotten stopped out of this one and barely made any money on this one. There wasn't much in it for it. Because of this, if you look at the trading over the past couple months, it settles into days after days of going nowhere. Like, you think a move is about to start, and it runs out of gas. Very hard to gauge the yen. We had a nice buy signal here. We took advantage of it, and it just really yielded nothing. So, and right now we're not looking at this as a continuation trade. We look at this considering is this just sideways, and that the signal is over. Even if it does go higher, then it is what it is. But right now we're in on this market. We're also not very bearish either. I think this is obvious. You can see for the past couple months, we're contained within this 109.93 area down to 105.94. So basically a $4 range. And it's very choppy, except for this one little swing up and swing down here. That was the only trade that we had, and ever since then, basically that lasted, what was it, from June 2nd until June 11th. You had 9 days, which is only, 9 to, 5 trading days. So this is nothing to really, get excited about or look forward to as far as swing trades. I would be very careful trading the US dollar yen as we move forward over the next week or so. If we can continue to get a move, then maybe we can figure out some direction and also some targets. Now the Australian dollar, US dollar, now here's some other crosses we're heading into and getting some ideas. This is where I think you're going to see some action. We have this upward sloping support line that the market had gravitated through. So the big question is it sideways or is it basing, setting up for a rally? Well, a rally above 70.66 here would have us trying to get back above that upward sloping support line. But right now, it looks like it here to the downside is the one to really watch. Between these levels, I think you're in sideways mode. But if we can fail at 67.75, then maybe we can get a good correction going. We don't have any signals here, but this market looks like it's ripe for a continuation of a corrective move to the downside, which this is the thing where I said the dollar index might start to become hard to gauge. You could see a lot of markets going sideways or even falling against the dollar while some are going to be rallying. So I think we're going to have a divergence. The world is coming off of this coronavirus thing. The U.S., while it is escalating here, or whatever that is now. So that's why you're starting to see them free float once again, where they are not just going so much in not necessarily completely in tandem, but for the past few months, it's either been all the markets rallying versus the dollar or all the markets breaking versus the dollar, and it was just a matter of to what degree that they were doing that at fairly similar time period. Divergence, which this means that is for trades, as well as know that the U.S. dollar index now is not going to be our best indicator either. So this is all good information. It's a little tough to absorb. It's a summertime trade, but there are opportunities. Now, speaking of opportunities, New Zealand dollar, US dollar, this is the one where things are getting kind of interesting. So we just took a look at the Australian dollar, US dollar. Now, the Aussie and the New Zealand are very similar as far as, obviously they're same trading zone, but they don't necessarily trade in tandem together all the time. But when you have big fundamentals globally, they typically will have sometimes, they will for a short period of time. As you can see with the Australian dollar, that one failed upward sloping support, but it had a much steeper rally. This one here continues to stay above the upward sloping support. It's continued to make higher move highs and higher move lows. However, it's falling just below this last breakout here. We're looking for a breakout of either the downside here or we're looking for a breakout of the upside here. Now, since the Aussie, like I said, that was a steeper slope sideways. Maybe this is also showing the same thing, that both of the currencies now have pretty much stabilized versus the dollar. We're back to pre-coronavirus, lockdown. Market had been railing versus the dollar, had fallen off at the beginning of the year, and then basically has bounced since the middle of March. The question is now, will it continue to rally? Well, I think right now this could be already long. We're looking for a breakout here of 65.92 to confirm momentum. I would say selling against that. This would be your risk level. So your range trade or does turn out to be a bear, you're in a very good selling area. But I would use caution. Anything above this, actually, let's get this a little bit lower. There we go. Or just a little bit higher there. Anything above that is where you have to definitely be careful, because the bullish momentum will be most likely kicking into gear one side. So it's not like it's over, because there's no reason to say it is over. So the price action, dollar weakness in question here, and we will find out if we can keep on. If we break out to the upside, then that would be interesting, because as the New Zealand dollar gains strength versus the dollar, in fact, let's go back to the Australian dollar, US dollar real quick, then that would give credence to hope. Doesn't, then you can see that there is true divergence between Australian dollar and New Zealand dollar. In fact, New Zealand dollar, Australian dollar, if we pull that up, okay, so here's something to look at. Maybe this is why the New Zealand dollar is doing what it's doing. The New Zealand dollar, Australian dollar has been trading lower versus the Australian dollar for months on end, since the middle of March. But now it looks like it's topped out. And here, look what this is. This is like a head and shoulders. I haven't even looked at this market in a long time. So let's see. If we go from this level right here, this will be our big breakout area. A rally above 94.52 here, and this currency cross would be very, very more strength for the New Zealand dollar versus the Aussie, but that would mean that we could have a divergence. So let's go back to the Australian dollar, US dollar. So the New Zealand dollar, if it's strong versus the dollar and strong versus the Aussie, that would give that uptrend. Meanwhile, since the Australian dollar is weaker towards the New Zealand dollar, it may also keep it in a sideways to lower trade versus the dollar, meaning that now while the other one is going to continue higher, this one here will start to continue lower. And this will be if the New Zealand dollar, US dollar continues to go pressure resistance, and if this market falls from 67.75. So we do have a nice little potential swing trade and divergence trade going on in this between these currencies. And let's get this thing back up. Come on, New Zealand. There we go. And like I said, if this one rallies, and nice, interesting swing trades in all the other currency crosses too, because it pretty much confirms that as far as globally, the currency markets now are moving on from coronavirus, at least as far as the other global currencies are concerned. Not necessarily versus the dollar, but the dollar will be one that definitely the coronavirus is definitely going to be watched for. I mean, I think it's going to go on through the rest of this year. I don't think it's going to end at least until after the November elections. So we're looking at August, September, October, and November. We're looking at 4 more months and getting through the middle of the 4th quarter. So interesting. We'll see what happens. But let's look at the US dollar TRY. And this is something that's really interesting. This market had been stretched for quite a long time. But this upward sloping support line here, this goes all the way back to August of 2019. So this market's been in a bull market for almost a year. And now here we had come off this high. We're still staying above this last swing higher move low, but this market has gone nowhere for weeks. With all the stuff that's gone on in the Middle East, and especially with the coronavirus, and Turkey got hit really hard, and everything else that's going on in that region, you would think that this market would be swinging, and it had been swinging radically, especially during the whole course of 2020, and now it's just tightened up to these tiny, look at how this is. We have to go all the way like this just to give you an idea of how tight, so relative to what it's been doing. So we have dollar pretty much bottoming here, at least it looks like. We'll see. If we have a breakout to the upside above the $6.99 level, then I think you're going to obviously see dollar strength. And this could be just for other reasons. The dollar could be a bear versus most currencies. This market is still in a bull market, but it's showing that the dollar seems to be kind of tightening up and locked into a sideways trade. US dollar Mexican peso, this is very interesting. It had been in a very big bear market until the coronavirus ran. It had a big run up. We had this nice head and shoulders pattern here that gave us a breakdown into this area here. We had a nice high probable Japanese candlestick buy pattern that was right here, and that yielded this nice rally that we fell off of. And now the question is this intermediate term down bearish move, was this just a correction move to the upside, and now we're going to continue lower? Or is this the beginning of yet another way of pressuring resistance? Remember, we have this downward sloping resistance line here. If we get above the last swing high at 23.23 pesos, we obviously will be right there. If we can get above that, I think we will continue our trading back or up towards this 24 to 25 pesos to the dollar range. Not necessarily overly bullish, but I think that the bullish momentum could be continued here. So that, in other words, this last break off this high to this higher move low, this was just a corrective move, setting us up for a nice intermediate move to the upside. Another indicator here is that today, let's just say that the market's closed today and we rolled over into Wednesday's trade. This would be another signal just like this of a potential rally to take out this resistance. If that's the case, then that really lays credence to us hitting this 24 pesos to the dollar. So right now, this market could collapse. It's only 9:50 Chicago time. We have plenty of time left in Tuesday's trading. Now, if this market was to end up falling apart and settling lower or just slightly higher, then this signal wouldn't be here. But if it was to close where it is right now, then this would be a short-term buy signal, which would lay credence to this last slide of being just a corrective move before the US dollar Mexican peso continues higher in a big way. Now we have another market that's very interesting, US dollar Canada. This is one of the first markets to consolidate after the big shakeup in March, and now we have set a base, and we had a nice buy signal here a few weeks, almost a month ago, and it came up and we were just buffering up this downward sloping resistance. We fell off of it, and now we have the same case here, just like we have going on in the peso. If we were to settle at this level right now today, then this would have us set up for a corrective move higher, challenging this downward sloping resistance level and making a play for this $37.11. Any trading above here has us on an upside breakout, where this consolidation pattern right here sets us up to be a upside breakout to the targeting higher move highs. And not that it's going to be overly bullish, but I think that would confirm a base here and then set us up to get into this range where we've been for quite some time. So somewhere around here. So up from $1.38.5 up to $1.42 even. That would be, basically $1.42 even. So somewhere up in this area here. This would be our upside target zone. If this is not a corrective move higher, and this is actually the beginning of a true bull trend, which we had made a lower move high, higher move low, higher move high. As of yesterday, a higher move low, and that sets us up for what? A higher move high, which is a bullish trend, correct? So, and that would have us targeting this, like I said, this target band of $1.38.54, and if it gets above there, then most likely we get back into this, as you can see, where the bulk of trading had happened for the past 2 out of the past 3.5 months. Now let's check out what is going back on in the euro US dollar, since that's where we started. Oh, as you can see, it's slightly lower. It's not much lower, but it is slightly lower, and that is the one where the dollar is actually gaining some strength. But then we have the pound US dollar, which is in our target zone now if it's just a correction. If it's going to be a sideways to lower trade to continue, then this is most likely where it runs out of gas. And if it is going to be a continuing bull it's most likely going to be a grinding bull snaking along like we have this line here. So those are two big markets to watch. We don't have many signals today, but we're coming off of holiday markets. Never ever try and force the market or force a trade. So while you're looking for a trade and you want to learn how to trade actionable signals, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. Please subscribe to our YouTube channel here, Forex Trading Unlocked, and always check us out at www.forex-trading-unlocked.com. I want to thank you for your time and tell all your friends about our channel too. So